Hello students, I Prabha Sharma welcome you to the next content of the accounting ratio as a tools of analysis of the financial statement. Today I will tell you about the concepts and types of liquidity ratios and the current ratio. How will you test the liquidity of the organization? The liquidity ratios are used to test and evaluate the long-term solvency and the liquidity positions of the business concern. Liquidity word is referring to short-term solvency positions. So that's why, because the money can be converted into very short period into the liquidity, that's why it is called as the short-term solvency. It tells whether the short-term liabilities can be paid up out of the short-term assets, means the current assets. So that's why it helps to calculate the working capitals is existing in the organization and test the short-term efficiency of working capital. It is also important to the shareholders and the long-term creditors in determining the to what extent the prospectus of the dividend and interest can be paid in the regular way. So it means the liquidity is the to know about the short-term solvency position, tell the business in the positions to pay the short-term liabilities or not, and helps to check the working capitals and also give the indications to the payment of the dividend as well as interest. The types of liquidity ratios are number 1 current ratio, number 2 acid test ratio called as quick ratio. Now you may see the what do you mean by the current ratios. The formula is listed here. Current ratio is equivalent to current assets upon current liabilities. But you may reverse it. The meaning is it makes the relationships between the current assets and the current liabilities. The both are the parts of the balance sheet. So that's why these ratio, because the contents belongs to the balance sheet called as balance sheet ratio. The current ratio, the ideal ratio is 2 is 1. That means current assets should be double than the current liabilities. Higher the ratios indicates under trading and over capitalization positions. Lower the ratio indicates over tradings and the under capitalizations positions. So it means these ratios are helpful to tell the working capitals positions of the business concern. Thank you.